Good morning, everyone, and welcome to today's session. Today's session promises to be another insightful and educative one where we're talking about the new tax law and how it affects your business. I want you to please confirm if you can hear me in the chat box. Please, can you all hear me in the chat box? If you can all hear me, please confirm in the chat box if you can hear me. Oh, thank you so much, Trustin. Thank you, Ismaila. Thank you, Babo. So, like I said earlier, welcome to today's session. And we have brought to today's session an expert that was speaking to us on the importance of the new tax law and how it affects or how it affects your business. So just before we get into that, would like to crave your indulgence for um a little bit, um, 10 minutes, but for a lot of people, for more people to join, I can see that more people are joining, so we don't start off without them. But while we wait for people to join, can we all introduce ourselves in the chat box? Let us know what you do, where you participating in the session from, where you joining the session from. Let's know. Network in the chat box, introduce yourself, what you do, where you're joining this session from. Um, Please, can we get the chat box buzzing? So can you introduce yourself in the chat box? Let's know what you do, what your business is. You never can tell. This is an opportunity for you to get an opportunity to network with other business owners like yourself. So please um, do start networking in the chat box while we wait for more people to join the session. Um, So we'll be starting off at exactly 11:10. So please, would like to crave your indulgence for more people to join. But please, you can go ahead and start introducing yourselves in the chat box. I can't see anyone engaging in the chat box. Please, can you start introducing yourself? What do you do? Where are you joining this session from? So while we wait for people to start, introducing themselves in your chat box. I can see there's someone's hand raised. Please, can you lower the hand? You would get an opportunity for you to ask your question as soon as the session is over. You can use the Q&A box for any questions that you might have. Please use the Q&A box. Thank you, Afolabi Paul. Afolabi Paul says he's a graphic designer and is joining from the Kotun Alimo show. Welcome to today's session. Thank you for joining today's session. So while we wait for others to just join, so we can see our facilitator has also introduced himself in the chat box. So please go ahead, introduce yourself. Let us know what you do. Mr. Ismaila is saying that Ismail Abdullahi is the CEO of Abdullahi Larry Nigeria Enterprise, and he is a freight forwarder, transporter, realtor, and auto dealer from Agbado, Kyoto. Seems we have a whole lot of Alimosho people in our session today. I can see another Alimosho. So let's know where you're joining us from while we wait for others to join. So we'll be starting the session proper by 11:10. Thank you. Okay. Thank you everyone for staying tuned to today's session. So while we wait for, okay, I can see that more people are joining this session. So please, can we so I can see that it's just Mr. Ismaila that's it's just Mr. Ismaila and Mr. Paul that has introduced themselves in the chat box. So please, can we have, you know, can we have more people introduce themselves in the chat box? Network. This is an opportunity for you to meet other business owners like yourself. Um, so please welcome Yusufa Aziz. Welcome. So today we'll be speaking about the new tax law, and I'm very sure that a whole lot of businesses would love to know what this new tax law entails and how it affects their businesses. And that is exactly what we'll be speaking on today. But I can see that we still have more people joining the session. So we'll just wait around a bit for more people. But while we wait, I can see people on this stream, but please introduce yourself in the chat box. Let's get to meet you. Let's know where you're joining the session from. Let's know where you're joining today's session from. Um, so while we wait, let me introduce myself. My name is Omotayo Akiumi. I'm the business support officer here at the Lagos State Employment Trust Fund. And I can see Yusufa has told us that he's an entrepreneur from Surulere, Lagos State. Yes, we can find another person from another local government and not just anyone sure. So let's know where you are joining this session from. Let's introduce yourself in the chat box. While we wait for more people to join so we can start the session proper. So for those that would like to also, go back to watch this session, you can find the session on our YouTube page at Lagos State Employment Trust Fund on YouTube, and you'd find an opportunity to go back and rewatch the session. But you can get your writing materials, get your all your writing materials ready, and ensure that you are attentive to every single thing that we said in this session today so that you would have questions. You have your questions answered. You have your questions prepared that you would like to ask our facilitator as soon as this session is done. So we'll be starting the session proper in a bit. So please um, bear with us while we wait for more people to join the session. Thank you. Yes, apologies everyone. Good morning and welcome to today's session. So we were waiting for more people to join the session, hence why you couldn't hear me for a while. But please can you all confirm that you can hear me now? Please can we all confirm you can hear me now? So I can see Mr. Trustin is joining us from another Alimo show. Seems to have a whole lot of Alimo show seems to be winning on this session today. So please okay, thank you so much. Thank you so much. Thank you. I can see confirmation that you can all hear me. Um, so I can see Mr. Cornelius is joining us from Ogba. That is a new one and a very new local government. So thank you all for confirming that you can hear me loud and clear. So like I introduced earlier, just before some of us that weren't on the session joined the session, my name is Omotayo Akinwumi. I'm the business support officer here at the Lagos State Employment Trust Fund. So while just before we start the session proper, we're still waiting on the head of the business support unit, that is Olafuna Shubikola, should be joining us shortly to kick start today's session. But just before we start the session proper today, I'm very sure a lot of us has heard about the Lagos State Employment Trust Fund, and we'll be having the head of the business opportunities join us shortly to speak more on Lagos State Employment Trust Fund and what we offer here at the Lagos State Employment Trust Fund. But just like I said earlier, we'll be speaking today on tax, on the importance of the new tax law and how it affects your business. So we all know that this new tax law has, you know, brought, as in, it has dug up a whole lot of questions that we have people asking about what it entails and how it affects all us as business owners. So that is all what we'll be learning about today. Um, but can we have more people just network in the chat box? We just had maybe three, four people who just introduce themselves in the chat box. Please, can more people engage us in the chat box? Let us know where you are joining us from. It helps us understand, it helps us know how far we're able to reach. We've had people join us even from outside the country or outside of Nigeria for all our other sessions. So let's know where you're joining us from. Let's know what you do. This is an opportunity for you to network and to meet new people, meet new business owners like yourself that you can collaborate with. No man is an island. As a business owner, you all need one another in one way or the other, either directly or indirectly, to help grow your business. So you never can tell who would be there to, that you might just connect with to say, oh, I do this, and the other person is like, I do that, and you can come together to, to make magic for your businesses. So while we wait for so we're still waiting for people to start, you know, introducing themselves in the chat box, please. So welcome, Fabian. I can see Fabian. Welcome, Fabian. So Fabian says that Fabian is a creative director from based in Lagos State. Welcome, Fabian, to today's session. Have Toby that's into interior decor. Oh wow. You have locations at Ota and Ibadan, nationwide delivery. Welcome to today's session. So I'd like to welcome everyone once again to today's session. My name is Omota Akimi, like I introduced earlier, and I'm a business support officer here at the Lagos State Employment Trust Fund. So what do we do here at the Lagos State Employment Trust Fund, you might ask? So for those that are familiar with the Lagos State Employment Trust Fund, you know what we do. Familiar with us and what we do here at the Lagos State Employment Trust Fund. The Lagos State Employment Trust Fund was enacted into law by the Lagos State Employment Trust Fund Act of 2016, and this law was brought about to, you know, help create this establishment to help with the issue of unemployment in Lagos State. So what we do is we give access to finance to business owners here in Lagos State. And then we also give capacity building opportunities through all of our sessions, like such as the one that we're having today. We have our master classes, our we have our master classes, we have our we have our webinars, we have our advisory sessions, we have our financial advisory sessions, our risk advisory sessions, we have our HR advisory sessions, our legal advisory sessions, we have our marketing advisory sessions. So all of these sessions are put together to help, provide you with the necessary knowledge, the necessary skills that you need to put the necessary structures in place for your businesses. And you'd agree with me that today's topic is no different, and it will help you learn a whole lot as to what you need to know. The need to know, the nitty-gritties you need to know. You need to know about the new tax law and how it affects your business. We also have our business registration that's currently ongoing. So if you know you're a business owner and you'd like to register your business, be on the lookout for the call for interest for our business registration. We also have access to market opportunities that we give to business owners here in Lagos State. So if you know you're a Lagos resident, you reside in Lagos, not that you are an individual of Lagos, but you reside in Lagos and you can show this through your proof of residence, that is your LASRA, that you reside in Lagos. You have an opportunity to benefit from all of our programs here at the Lagos State Employment Trust Fund. We also have our employability programs. So if you're within the ages of 18 to 35, you'd like to acquire a skill, this is where our Lagos employability program comes in. If you like to acquire a skill, be it fashion, be it makeup, be it construction, all of these skills are available with our employability programs. We also have, in the tech space, you have body tech ideas that you'd like to bring to life. You are in need of workspace vouchers to help augment payment for your workspaces. This is where Lagos Innovate team comes in. Now, to get into today's session proper, we have with us Mr. Balogun Sheung Ayodeji, and he'll be taking us through today's topic, which is the new tax law and how it affects your business. Now, today's session promises, like I said earlier, today's session promises to be another, very insightful session, and just get together your writing material, get together your, everything that you need for today's session, because trust me, you're going to be learning a whole lot and be taking a whole lot out of today's session, and you won't regret attending today's session. Trust me. So who is Mr. Sheung Balogun, you might say? So let's get to know a bit about Mr. Sheung Balogun, Mr. Sheung Ayodeji Balogun, who will be taking us on today's session. So So Mr. Seun Balogun is a seasoned tax and finance professional with years of hands-on experience in corporate tax compliance, advisory, and business process improvements. He's presently a senior consultant at FAG Consulting, where he leads the tax advisory team and contributed to major restructuring projects, business process reengineering initiatives, and complex tax audits for organizations across key sectors such as educational, FMCG, oil and gas, construction, fintech, and healthcare. Mr. Seun holds a bachelor's degree in accounting from Kogi State University with a second-class upper and further solidified his technical expertise by becoming a member of both the Institute of Chartered Accountants of Nigeria, ICAN, and the Chartered Institute of Taxation of Nigeria, CITN. Mr. Seun's practical experience and strategic mindset have led to successful outcomes in high-stake tax matters, such as resolving and managing significant multi-million naira tax exposures. He is passionate about helping businesses navigate the evolving tax landscape while promoting compliance, efficiency, and sustainable financial practices. So can we please welcome our facilitator, Mr. Seun Balogun Ayodeji, even as it takes today's session. Mr. Seun, please you can take it away. Thank you.
All right. Thank you, Omotayo, for that wonderful introduction. So, good morning to everyone on this call. So, once again, my name is Balogun Seun, a senior consultant with FAG Consulting. So, you might want to ask, what does FAG Consulting do? So, FAG Consulting is Omotayo, can you confirm you can hear me?
Yes, we can hear you now.
Okay, thank you. I said thank you for that wonderful introduction, and it's a pleasure to have me on this call this morning. So, good morning to everyone on this call. So once again, my name is Balogun Seun, a senior consultant with FAG Consulting. You might want to know, what does FAG Consulting do? So FAG Consulting is a professional service firm that specializes in accounting, tax advisory, business advisory, and audit for businesses across different industries in Nigeria. So our goal within the firm is to help business operate efficiently and grow sustainably. So recently, we launched one of our business line called the Virtual Business Support. And this is building from our experience and expertise dealing with different small businesses in Nigeria. And the word virtual business support, it's basically an initiative to help solve the common challenges faced by these same small business owners. And what are these challenges? Challenges of keeping records, tax compliance, and mainly lack of oversight on how their businesses are performing. And with FAG VBS, you could get access to professionals at the very least cost rather than hiring an in-house consultant or accountant. Finally, you could get insights that helps you track your business growth, make informed decisions, and stay compliant. So on my screen, if you want to know more about FAG Consulting, you could contact our team or go to our website. You'll see more about our new service line called the Virtual Business Support. So now to today's topic, we'll be discussing the new tax law and how it affects your business in Nigeria. So today, I'll walk us through the new tax law and how it affects our businesses. So look at the new tax law in review. So we'll also look at the common taxes businesses in Nigeria are exposed to. So we'll also look at the key changes within the tax law. And very importantly, we'll look at the tax filing, the due date, and the penalty exposure for businesses in Nigeria. We'll also try to make this section very practical by looking at the practical steps for compliance for businesses as against the commencement of this new tax law. Then we're going to have a questions and answer session. So let me quickly give a backstory on how this new tax law that comes about, that we're all here, new tax law, new tax law, new tax law. In 2023, the president inaugurated a fiscal policy and tax reform committee to carry out different tax reform in Nigeria and to provide recommendations and implementations on whatever they will come up with. So fast forward to on the 26th of June 2025, President Bola Ahmed Tinubu then signed the new tax reform bills. And what are these bills trying to do? It's trying to create more transparent and efficient tax system in Nigeria. And this bill that has been passed and has been signed by the president is expected to commence 1st of January 2026, which is aimed at improving Nigeria's tax system. And this is why many stakeholders across the tax industry are trying as much as possible to create awareness before the commencement of this act in January 2026. So now we have the Tax Reform Act in view. So it's more like a four-in-one law. So we have what we call the NRS Establishment Act, which means Nigeria Revenue Service Establishment Act. We also have what we call the Nigeria Tax Administration Act. Then we have the Joint Revenue Board Establishment Act. Then we have the Nigeria Tax Act. So I'll briefly speak through 4 of these tax acts so that we could have a layman understanding what it's all about. So first of all, we have the NRS Establishment Act. I know many of us on this call that have heard about, the current FRS is going to be renamed. They're renaming the current FRS. However, it goes beyond changing the name from FRS to NRS. So what this act, which I'm saying the law, talks about is establish the powers of the tax authority. So in this case, it established the powers of FRS. What does it mean? How does FRS operate? What are the powers guiding them to operate? How is FRS going to be funded? What are their own protection against tax issues with taxpayer? So basically, the NIS Establishment Act deals with the framework on how FRS is going to be governed and operated. Now, we also have the second one we call the Nigeria Tax Administration Act. From the word Administration Act, it basically talks about how our taxes are administered in Nigeria, how our taxes are assessed in Nigeria, how our taxes filed, and how our taxes enforced. In this act, you look at some parts talking about what's the due date for filing, what are the penalties if small business owner does not file on time, and what are the functions of the tax authority in case of defaults by taxpayer. We also have the third one, which is called the Joint Revenue Board Establishment Act. From the word, it's Joint Revenue Board. What this act establishes, or what this law is talking about, is just trying to harmonize the coordination between the federal tax agencies and different state tax agencies in Nigeria, and also talk about how that board is going to be funded and how it's going to be operated. Then we have the Nigeria Tax Act. So currently, what we run in Nigeria is that different taxes have its own standalone acts. As of today, we have what we call the Company Income Tax Act, we have the Value Added Tax Act, saying that different taxes have its own law that it's being governed by. So what this committee has done is that they've compiled all these different tax acts into one single document, which is called the Nigeria Tax Act. And practically, what does the Nigeria Tax Act talks about? It defines who pays this tax and how the taxes are to be paid. So that's what the Nigeria Tax Act is all about. So as we move to the next slide, we've deemed it fit that because it's important as small business owners, before you want to understand how does this new tax law affect your businesses, it's important to have the first-hand information. What are even the taxes you are expected to comply as a small business? Because if we just dive into talking about, oh, the law says this, the law says this, even as a business owner, do you know the tax you are expected to comply with? So that brings us to the common taxes for SMEs and MSMEs in Nigeria. In my experience dealing with small business owners, I've noticed that a lot of business owners don't understand that the nature of your business registration with CAC also affects your tax obligation in Nigeria. So let me give more clarity to that. You might register a business as a business name. You should clearly know that your tax obligation will differ with a business that is registered as a limited liability. The same thing goes for business that registers as an incorporated trust, just like NGOs. Your tax obligation will differ from a company that is registered as a limited liability. So it's very important because a lot of small business owners just jump into, oh, I want to register my business, and without considering the tax implication of registering your business. So look at the 4 common taxes that businesses in Nigeria are exposed to, regardless of your CAC registration. So we have the company income tax. From the word company income tax, it's simply the tax that a company pays on the profit on annual basis. And currently, you might want to ask, what is the rate for the company income tax on your own profits? So as at today, the rate for company income tax has been divided into 3 based on your category of turnover as a small business owners. We have 0 to 25 million turnover, so your company income tax rate is 0%. So within above 25 million naira to 100 million naira, your company income tax rate is 20%. So above 100 million naira turnover annually, your company income tax rate is 30%. And this is paid based on your taxable profits. We also have what we call the personal income tax. So when you hear the word personal income tax, it's basically talking about taxes individuals in Nigeria are expected to pay. And in practice, the word personal income tax can be divided into 2. We have it from 2 angles. We have it from the payee, and we have it from the direct assessment. So when you hear the word payee, it's basically the tax that are deducted from employee salary, which is the own form of personal income tax. They will also have the direct assessment angle of personal income tax. And this is taxes that are paid by individuals, small business owners, artisans on an annual basis, depending on the income from your business as an individual. So you might hear the word pay, direct assessment, all are talking about personal income tax. These are the taxes that individuals living in Nigeria are expected to pay. On the other angle, we also have value added tax, which is very, very, very popular, which is more like a consumption tax. So value added tax currently is at 7.5% on the rate of goods and services that is being sold. So what is expected that as a small business owner, once you sell goods and services that are vatable, the word vatable is very important. So you're expected to comply with the value added tax act currently. Then the final one, we also have withholding tax. Withholding tax in itself, it's not really a tax, because I've seen a small business owner saying, why do I need to pay withholding tax? Why do they need to deduct withholding tax and all that? So withholding tax is not a separate tax itself, but what the government has done is that they've empowered business owners that at the point of paying a third party, like at the point of paying a vendor, if your transaction with that vendor is subject to withholding tax deduction, you are expected to deduct a separate percentage from his invoice and you pay him the balance. So for business owners, for withholding tax, you might be worried about, oh, how do I know when to deduct? How do I know the rate to deduct? And how do I know these taxes I've deducted, who am I expected to remit them to? So that is those are the questions a lot of business owners will want to ask when it comes to withholding tax. What is the rate I'm expected to deduct? When am I to deduct? And who am I to remit the withholding tax I've deducted to? So these are the basic common taxes that every small business owners in Nigeria are faced with. We have other taxes like capital gain tax, petroleum profit tax. These are some sectorial taxes. So not every business here is into oil and gas, but as a business operating in Nigeria, you'll be faced with these formal common taxes I've highlighted in this slide. So now moving to the main thing for this session, we talked about the Nigerian tax law and how it affects your business. So what I've done in my previous slide is to highlight the key taxes that businesses are exposed to. So in my subsequent slide, so what I'll be doing is that I'll be picking the key parts of those taxes. What are the changes that has occurred in those taxes and how it affects your business as a business owner. So I'll be starting with the company income tax. So there are key changes that has been made based on the new tax law that was signed for every small business owner that they need to know. So the first key changes relating to company income tax is that the government went ahead to increase the exemption threshold for small business owners from annual turnover of 25 million to 50 million. Currently, a lot of small business owners, you hear that, oh, I'm not making up to 25 million, I'm not expected to pay tax. I'm not making up to 25 million, I'm not expected to pay tax. So what this new tax law has done is that they've increased the threshold. So from 2026, to qualify as a small business owners, there are certain criteria you need to meet according to the law. What does that mean is that your turnover is expected to be below 50 million naira annually. And also, your company is not expected to have a fixed asset, very particular, fixed asset not less than 250 million naira in the year. Those are that's the criteria for you to be called a small business owner. In my subsequent slide, there's a part that talks about sectorial parts to it. The new tax law gave us an interpretation of what a small business owner means. It talks about the turnover, it talks about the asset base. It went further to exclude business engaged in professional service. You will not be called a small business owners. So what is the implication of that definition or that interpretation of small business owners? So if you are a business in Nigeria, you are engaged in professional service. And by law, what does professional service mean? It's talking about accounting firms, law firms, architects, surveyors, all businesses that are into professional services. So that means is that regardless of your turnover, you are not exempted from company income tax. You can be a small business that is a legal firm, but you are making just 2 million naira annually. You might think the definition per turnover covers you, but the new tax law has exempted any business that is into professional service does not qualify as a small business in Nigeria. So it's important that any business that is into professional service on this score, you should know that from 2026, regardless of your turnover, regardless of your asset base, as per law, you are no more called a small business owner in Nigeria anymore. And what does this mean is that currently we have highlighted that our company income tax rate is divided into three: your small company, medium company, and large company. So what does this mean is that from 2026, we only have two rates. Either you are liable to company income tax at 0% or 30%. So that is to say that if you don't meet the definition or the criteria for calling you a small business owner, your company income tax rate from 2026 will be 30%. Another key act or another key changes in this tax law for small business owners is the part that has to do with minimum tax. So currently, you might see some businesses that they are not making profit, but they are still paying tax. That's where the concept of minimum tax comes into. So government have set it in a way that even if you are not making profit, you are still expected to pay minimum tax. As at today, the rate is 0.0% of your annual turnover. You pay minimum tax. And currently, only small business owners are exempted from that minimum tax. That is, if you are below 25 million currently, you are exempted from minimum tax. But if you are making 26 million, 27 million, above 25 million naira, and you still make loss, you still pay minimum tax. So you see a lot of business owners complaining that, oh, Mr. Shon, I'm not making profit, but why am I paying tax? You have to start explaining to them the concept of minimum tax. But with the introduction or with the changes in this new tax law, it went further to say that only companies with turnover above 20 billion will now be subjected to minimum tax at 15%, which is what we call the ETR, effective tax rate. And I think it's good for business owners in Nigeria, rather than saying above 25 million or above 50 million, I'm still making loss, I'll still have to pay minimum tax. So with these changes, it means is that if your turnover is still below 20 billion annually and you are making loss, you will not pay company income tax. But I know some business owners might want to play smart, is that they want to engage some consultants to prepare the books in a way that let me take advantage of this thing. The government have said that if I'm making loss and I'm not making up to 25 billion naira annually, I'm not going to pay tax. But I just want to make it clear that the tax authority in this case, which is FRS, has the power to review your books. So what does that mean is that because you are currently doing self-assessment, you assess yourself to tax. So the tax authority can pick your tax you filed and say that, oh, this expense is reported, we feel it's not a business expense. Oh, based on your records, we feel you've underdeclared your income for that year. So I'm just saying, as a small business owner, if you think you want to be creative with your books, you want to manipulate your profits so that you are going to report a loss so you not pay tax, just you need to know at the back of your mind that the tax authority has the power and they have the authority to review your books and come up with their own findings and say, no, you did not make loss for this period, you manipulated your books, and you are going to pay the additional tax you are expected to pay. And at that point, you will pay the additional tax with interest and penalty, which is basically avoidable. We also have another key introduction in this new tax law talking about the development levy of 4% of your profit currently. So currently in Nigeria, we have what we call the EMAC taxes. EMAC taxes are created for specific purposes. So government will come up with, say, we are creating an educational tax of 3%. So what does this mean is that once company pay this educational tax, it's going to be the funds collected from the educational tax is going to be used for educational purpose in Nigeria. We also have the police trust fund levy and other small levies that are collected by government. So the tax reform committee deemed it fit that we have multiple taxes in Nigeria, which is a whole lot for businesses to comply with. They now went further to say all these multiple taxes or levies, let us bundle them into one tax we called the development levy. And the rate for development levy from 2026 is going to be 4% of your accessible profit for tax purposes. That is another key introduction with the new tax law. Then another key change is that we have another part talking about how do you treat your foreign exchange transactions as a business. So what do I mean? As a business, you might need to incur some services or buy some goods for your business in Nigeria here, and you have to pay in foreign currency to your vendor or to that third party abroad. So, and now we all know the difficulty in getting dollars. How do you pay? Some banks make it difficult for you to pay for transactions for your vendor. But what the tax law is saying is that imagine you need to pay something of $200 to your vendor abroad, and you cannot source for dollars from the bank. You then have to go to the black market, buy it at a higher rate. And in your books, what you basically call as the rate of that transaction is at the rate you bought it from the black market. But however, government have now tried to be stringent on that to say that for every expense you incur, that is a foreign exchange transaction, what they are going to allow for tax purposes, they are going to use the CBN official exchange rate. So what does this mean is that regardless of whether you had to buy dollar at the black market rates, what the tax man is going to allow for that expenses, they are going to use the CBN rate for your business. So I don't know the intention. Probably they are working on how they are going to improve the forex supply to the market, so every small business could have access to dollar at the official rate, so that we will not have this challenge of you need to pay for something, you need to buy dollars at the black market rate. But that's another key changes for business owners in Nigeria. We also have what we call pre-operational expenses. So this new law introduced that for every pre-operational expenses you've incurred before you commenced your business, it's going to be allowed for tax purposes. So currently, as a business owner, what the current law is saying is that, like I mean, as of today, before 2026, the new law, the old law is saying that any pre-operational expenses you incur as a business, you cannot claim it as a tax deductible expenses when you commence your business. And just imagine that before you commence your business, you spent about 10 million naira trying to put things in place before you even actually commence your business. And the tax man is now telling you that that expense, you cannot claim it to, is basically gone. But this new law has look at that is a loophole. So they've gone further to say every business owner, if you incur any expenses within 6 years before you commence that business, it's allowable for tax purposes in the year in which you commence that business. So what does that mean is that when you're in 2026 and you incur some business expense, professional expenses in 2026, 2027, but you still not commence your business. So, and if you commence that business in 2028, so what the law is saying is that you are expected, or you have the benefit to claim those expenses you incurred before you commence that business in 2028. So that's the provision of the new tax law, and I think it's very good for business owners because we've had these cases with different tax authorities that business are actually real business expenses, but because that business owner incurred that expense before he commenced business, you still have to start dragging the tax authority that no, I want to claim this expense. The tax man will say you can't claim it. But the law is not clear on that any business expense incurred within 6 years before you commence your business, you can claim it for tax purposes. We also have what we call capital allowance. For tax purpose, capital allowance is given instead of depreciation. So because like the word depreciation is you systematically allocating the cost of your asset over the useful life of that asset. So currently in Nigeria today, we have capital allowance and we have two types of capital allowance. We have what we call the initial allowance that is granted to a business owner the first year of purchase of that asset. We have the annual allowance. But what the government has done with this new tax law is that they've scrapped the concept of initial allowance. They only have annual allowance that will be given to every business owner on a straight line basis based on the purchase of that asset. So briefly, so those are the key changes that affect company income tax for small business owners. So now we'll be going to what are the key value-added tax reforms based on this new tax law. Remember, I've defined what value-added tax means. I said value-added tax is a consumption tax paid at the point of consuming a goods or services by a business owner. So one of the key changes for a company from value-added tax is that the VAT rate still remains 7.5%. Initially, there were clamor before the president signed this law. There were clamor that they're going to increase the VAT rate to 10% or to 50%. By the point the bill went to the House of Rep for signing, I think they basically rejected that position and they retained the current VAT rate to be at 7.5% so as to reduce the burden on business owners and individuals on the consumptions of goods and services. We also have another key reform from this new tax law is that for business owners, you are expected to file your value-added tax returns, that is your VAT return, to the appropriate tax authority. And in this case, the appropriate tax authority is the FRS. So one of the reform is saying that as a small business owner, you are not obligated or mandated to file your value-added tax return. Remember, whenever I use the word small business owner, we need to put at the back of our mind what is the definition of a small business owner in line with tax law, which we already discussed. So the law for value-added tax is saying that you are not mandated as a small business owner to file your VAT returns before the due date, regardless of an economic activity or not. But sometimes because the law sometimes is also different from what is the reality. You will see that in reality, the tax man will tell you that even if you are not up to the threshold of above a small business owner, you are still expected to file your VAT returns. But sometimes it conflicts with what the law is saying. So as a consulting firm, we basically advise small business owners that even if you're a small business owner, it does not cost you anything to register for VAT and file your VAT returns. And in that case, you'll be filing new returns so that it saves you headache or unnecessary arguments with the tax authorities. So because the law will say as a small business owners, I'm under 25 million, you're not expected to file VAT, no problem. But if you are registered with tax office already, you still have this filing obligation. So it's just better you go ahead to file those taxes. Now, despite the law is saying that as a small business owner, you are not mandated because you fall within that threshold. The law still went to say any small business owner that want to voluntarily file a VAT return will need to write to the tax office that, oh, I know the law does not mandate me to file my tax return, but I want to voluntarily charge my customers VAT and I want to be filing. So there's a voluntary part to that law. Yes, by law, you are not mandated, but you can also still choose voluntarily. I'm charging my customers VAT and I want to be filing and remitting that VAT to the tax office. So another part of the law is saying that immediately you cross the threshold of stop being a small business owner, you are expected to make sure that you file your VAT returns. You file your VAT returns currently. Now, another key changes in this new tax law is that it allows for input VAT. So when we're talking about VAT, we have two parts to that VAT angle. We have what we call the output VAT and we have what we call the input VAT. So the output VAT is what you as a business owner, you charge at the point of selling to your customer, which is you charge it on your sales to your customer. The input VAT angle is when as a small business owner, you are going to purchase raw materials, you are going to engage a service with a third party, and that person charge you VAT, and you are expected to pay that VAT. That is what is called input VAT. So it's clear. Output VAT is on at the point of when you are selling to a customer, you charge that customer output VAT. Input VAT is at the point you are going to buy from a third party, is charging you VAT. So that's where you have the input VAT. So currently, what is obtainable in our law is that any input VAT a small business owner have suffered and you want to claim it against your output VAT, it has been restricted to only goods and services that you've purchased or you've imported into Nigeria. And that goods and services, you are using it to produce another goods that you will charge output VAT on. Or you are basically using, you are going to resell that goods. That is the current status of the law. So for a small business owner, you might engage a consultant and he charge you VAT. So for that VAT, you cannot claim that input VAT. What it means is that you just have to add that VAT as an expense to your business. But if as a small business owner, you are into the sales and supply of, let's say, cars, and at the point of you purchasing cars or importing your cars from abroad, and you suffered VAT at the point of import. So our current law says that yes, you can claim that input VAT because that car you are going to resell it, and the point of reselling that car, you are still going to charge your customer output VAT. So what does this mean mathematically is that if you charge your customer output VAT of 500,000, and at the point of you importing this car or you purchasing this car for resale, you paid the third party a input VAT of 400,000. At the end of every month, the VAT you'll be paying as a small business owner is your output VAT 500,000 minus your input VAT you've paid 400,000. So that is that at the end of every month, you're paying a VAT payable of 100,000 to the government. So, but what this new law has done is that in order to reduce the burden on business owners, it now went further to say that input VAT can be claimed on fixed assets and services consumed by a small business owners, but it has to ensure that this fixed asset and these services consumed is related to your vertical supply you are into. So what am I trying to say is that I like it that as of today, once you engage a consultant or you engage the service of a third party, a service, and it charge you VAT, you cannot use that VAT to charge you to reduce your output VAT because it's not recoverable. But from 2026, what the law is saying is that if you engage a third party vendor for a service and he charge you VAT, at the end of every month, that VAT he has charged you, you can use it to reduce your output VAT you've charged your customers. And I think which is more better. But it's very important that whatever fixed asset you are purchasing and whatever service you are consuming, and you want to use that input VAT to reduce your output VAT, you need to ensure that that VAT is related to your vertical supply. So that is another key changes, and basically that is what is obtainable in different countries across the world. We also have the angle of what we call zero-rated supplies. So I'll basically explain what zero-rated supply means, zero-rated VAT. In VAT, you hear that, oh, this goods and services is exempted, while this goods and services is zero-rated. So the difference is that when you hear that a goods or a service is exempted, that means that you are expressly exempted from charging VAT on that goods and services. Then when you hear a goods or a service is zero-rated, it means is that the VAT is at a zero rate. That is to say that goods you are enjoying or that service you are enjoying is vatable, but the VAT rate is zero. So that's what the concept of zero-rated goods and services means. But when you are saying something is exempted from VAT, it means is that this goods or services is expressly exempted from VAT. You can't charge VAT on it. So what the government had done is that we had the items what we call the basic food items, healthcare, educational materials, electricity, medical services, exported goods, and electric vehicles. Previously, most of these items are currently exempted under this old tax law. But under the new tax law, what the government has done is that they moved them from exempted to zero-rated. And this is the reason is that once you are selling something that is exempted, you cannot claim any input VAT you suffered because what you are selling is exempted. But once you are selling a zero-rated product and you have an input VAT, then you can recover that input VAT from the tax authority or from the government in case of calling it a VAT refund. So the idea is that imagine someone that is supplying rice. Currently, rice is exempted from VAT, but at the point of him getting those rice, he must have incurred some other VAT that would have increased the cost of supplying of that rice. But he cannot claim those input VAT because what he's selling is exempted. You cannot claim input VAT against what you are selling that is already exempted. So the government now deemed it fit that okay, this basic food product, let's move them to zero-rated. So once a rice supplier incurs input VAT, he can claim that input VAT or get a refund from the government because what he's selling is now zero-rated. It's not expressly exempted. So that is like the differences between exempted from VAT and zero-rated VAT. We also have the other part that are purely exempted. We have the financial securities, we have the rent, and we have transportation service that are exempted from VAT. I was talking about VAT reforms. There are cases where you have VAT refunds for business owners. Let's take an example. Imagine that you are a business owner, you've incurred input VAT when you need to purchase your materials, but you are selling to a company that operates in the free trade zone in Nigeria. You know, in some cases, when you are selling to companies operating in the free trade zone in Nigeria, you don't charge them VAT. So imagine in that case, But when you purchase the goods, you paid VAT to the other person. But because of the way Nigerian law is, when you are selling to free trade zone, you don't charge them VAT. So at what case, that means in that case, you have VAT refund. You need to pay for refund because when you make those purchases, you you had incurred VAT. But when you are selling to free trade zone, you cannot charge them VAT. So the new law is saying that for a small business owners, for you to apply for VAT refund, it must not be later than 12 months that transaction that gave right to that refund had occur. If not, it's going to elapse. So what does this mean is that if you engage in a transaction that will lead to a VAT refund from the FRS, you have not little less than 12 months to apply to FRS that you need a VAT refund. And if you don't do that after 12 months, basically you've lost that VAT refund. So most of these changes that are basically springing up as a result of this new tax law, we're also expecting the tax authority, either LRS or either the FRS, to release guidelines on how most of these benefits and how some of these provisions in the law are going to be utilized. Because if you ask me now, how am I going to get VAT refund? I don't have a clear answer to that because we're expecting the FRS to release a guideline to say, oh, for a business owner, if you want to get VAT refund, these things you need to put in place to get a VAT refund. So we're hopeful and expectant that before December, before the law take its effect in January, we'll have a lot of guidelines that will bring clarity on how a lot of the provisions are going to play out ahead of 2026. Then the new law also mandated that if a small business owner applies for VAT refund from the tax office, the tax authority is mandated that that refund must be processed within 30 days. A business owner has requested for that refund. So this also, we are still expecting to see how it's going to play out. Or is it still one of those things that I say is just the law, but it's basically not obtainable practically? But the law is mandating the tax authority that once a business owner has applied for VAT refund, you must ensure that within 30 days of receiving his request, that VAT refund must have been processed to that small business owner. Now, we also have another angle in this new law that extend VAT registration to non-resident suppliers. So when you hear the word non-resident suppliers, it means companies that are not registered with CAC. When you hear the word non-resident, it means companies that are not registered with CAC, but they do business in Nigeria. So what the government is saying that these companies, if you are doing business in Nigeria, you must register for VAT. Because if a foreign company is doing business with a small business owner here and is supplying that small business owner a goods or is rendering that services, they're expected to charge that small business owner in Nigeria VAT and remit to the tax authority. And that is not going to be possible if that non-resident company is not registered with FRS for VAT purposes, because the world is going global. Most of these companies don't even need to have physical presence in Nigeria, but they make a lot of money from in Nigeria. So what government is saying that these non-resident companies must ensure that they register for tax purposes, that is for VAT specifically, in Nigeria. So why is this important for you as a small business owner? Is that you might have some foreign vendor or suppliers that you do transaction with. So it's your duty to let them know that, oh, based on our new law, you're expected to register for VAT purpose with Nigeria if you meet X, Y, Z, and so criteria. So it's very, very, very important. Another part in this our new law is talking about expenses. So we have in tax, we have what we call allowable expense and non-allowable expense. So if a company is calculating its trying to calculate its tax profits, there are some expenses that you might incur and it's not allowed for tax purposes. Take for instance, as a business owner, you are paying your child school fees from your company's bank account. Yeah, for you say it's an expenses, but for the tax man to tell you that this expense is not for the business. So it will tell you that this expense is not allowed for tax purposes. So our law has now made it mandated that for any expense that a business should incur, for any expense you incur, and you fail to pay VAT on that invoice, it's not going to be allowed for tax purposes. So what this means is that as a small business owner, when you are dealing with third party, you must ensure that you get invoice from those third party, and you must ensure that they issue a VAT invoice. Because imagine you legitimately incurring an expense, but because you did not pay VAT on that expense, at the end of the day, the tax man will tell you that this expense you cannot claim it as a business expense because there is no evidence that you paid VAT on that expense. So it's very, very important that once you are dealing with third party, request for invoice, and always ensure that that invoice must include VAT, because by 2026, if you are incurring any expense and that expense does not include VAT, you might find it difficult to claim that expense as an allowable expense. But this is to put it at the back of your mind that there are some expenses that you might incur that are not vatable, so you are free. Take for instance the concept of the basic food item that is rated. Fine, these items are rated, or most of them are not vatable. So for a small business owner, you now need to make sure that if you are incurring any expense that is not vatable, you don't have any problem. But for any vatable expense you are incurring, you know that this expense I'm incurring for my business, so is vatable. Please, you have to ensure that that vendor issue a VAT invoice for compliance purposes, so you don't have issues in the future where the tax man will have to disallow that expense on that basis. The same thing applies to your fixed assets. Your fixed assets. Once you are purchasing a fixed asset or you are importing a fixed asset, please import it through the right channel that will show that you pay the applicable custom duties, applicable VAT at the point of import, or even if you are buying that fixed asset from the local manufacturers in Nigeria, you need to ensure that those fixed assets are vatted and you pay the VAT on those fixed assets, because the implication is that you will not be allowed to claim capital allowance on those fixed assets, and which will turn for you might result to you paying higher tax at the end of the year. So another thing that is very, very important for every small business owner for VAT you need to know is that the new tax law has introduced what we call the VAT fiscalization regime. So what does this mean is that business in Nigeria shall now have a compulsory e-invoicing VAT fiscalization system to aid in the collection of VAT. So currently, the FRS has introduced what we call like an electronic invoicing, that for every business owners, you have to integrate, or you have to register for that invoicing integrated to your business. That platform you'll be using to raise your invoice. And what does this mean? That at real time, the FRS can ascertain what your income is, what your VAT are expected to pay. But currently, the e-invoicing is it's more like in the pilot phase, and I think that has commenced this month August. But they are starting with companies with turnover above 3 billion naira. But the goal is that it's going to go around, regardless of your turnover, it's going to go around that every small business owner will be mandated to issue its invoice through the e-invoicing platform by FRS. So it's very, very important. So as a business owner, you don't have any excuse to say, oh, I'm not tech savvy, I cannot use the laptop, I don't know how to do it. Because if you don't do that, there's also a penalty. They said that the law is saying that penalty for failure to process your taxable supply through the fiscalization system, you are liable to an administrative penalty of 200,000. So imagine them penalizing you because you refused, or you said you cannot use the e-invoicing platform by FRS. So when that time comes, the goal, like I said, is for every business owner to be able to raise its sales invoice through the e-invoicing platform. And if you fail to do that, you'll be subjected to penalty. by FRS people. That is, these are the key changes, or these are the key reforms when we are looking at the Value Added Tax Act for the new tax law that has changed. So we also have some changes that with respect to the personal income tax. Remember in my earlier explanation, I talked about that personal income tax has two parts to it. We have the payee part that for employees in employment. We also have the direct assessment part that for business owners, that for individuals that are self-employed, that for artisan, or that for directors of companies that you are expected to, probably you are not doing payee, so that means you will be doing direct assessment. So what does this mean is that every individual, as long as you reside in Nigeria, any state in Nigeria, you are faced with what we call the personal income tax. Is another thing to know, oh, am I exempted or am I due to pay this personal income tax, either as an employee or as a business owner. So one of the key changes that this new tax law change in our personal income tax is trying to say we want to make tax very progressive. So in tax, when where tax is trying to be progressive, it's saying that the higher you earn, the higher you pay, but the lesser you earn, then the lesser you pay. So what does this mean is that sometimes you find people earning high, but they are paying little or no taxes at all. So what this new tax law have done for personal income tax is to increase the threshold to say people earning people earning below the minimum wage, you are exempted from personal income tax. You are not expected to pay personal income tax. Also, people that your annual income is not still up to 800,000, then you are exempted from personal income tax. So you might see a case that as an individual, your salary might not even be up to 700,000 annually, or even as a business owner, you might not even be making a business income up to 800,000 annually. That means you don't have personal income tax to pay either by way of payee or direct assessment. We also add the changes to the tax table. So these are this is like the rates. We call it tax band, income band, the rates that is applicable to for pay calculation or personal income tax calculation. Then another key thing is that as individuals, yes, I have income. You cannot say I'm making 12 million naira, then go and tax the whole 12 million naira. So the law gives room for what we call deductions. So according to this new tax act, it specifies what are the eligible deductions that individuals you can claim against your income. So what do I mean is that I might be earning 12 million naira annually, but that does not mean my 12 million naira will just be subjected to tax straight up. So there are deductions that I'll have to do against my 12 million naira before I arrive at my taxable income, and I'll subject it to the applicable tax table in point number 2. So the law listed out what are the eligible deductions. We have contribution to National Housing Fund. So if you're an individual or you're an employee, you're a business owner, you do contribution to National Housing Fund, which is currently like 2%, 2.5% of your income, and you have evidence that you do those contributions, then you can claim that deduction against your income. Also, if you're an individual, either a business owner or an employee, and you do what we call the NHIS, which is government approved scheme for health purpose, or you are doing what we call like the HMO, because you see some business owners, they do HMO for their employees or they do HMO for themselves. What does this mean is that at the end of every year, you are trying to calculate what is my personal income tax to pay. From your income, if you are doing HMO or NHIS, you can deduct that as one of the eligible deduction to reduce your taxable income for that period. We also have pension. So if as a business owner, you are doing what we call voluntary pension. So the law allows you to deduct it from your income to give you the taxable income that will be subjected to tax also. We also have another interesting part to say interest on loans developing owners occupy residential house. So what does this mean? That is, if as an individual You are trying to build your own house, but you took loan from one of the banks in Nigeria. So the government is saying that any interest on that loan that you are taking from these banks, they can allow you to use those interests as long as you have verifiable documents and the institution you took that loan is also registered with CBN. Then you can claim that as one of your deduction from your annual income you've earned for that period. We also have what we call, this new law introduced what we call the rent relief allowance. As at today, in Nigeria Personal Income Tax Act, we have what we call the consolidated relief allowance currently, which is saying 200,000 plus 20% of your gross income as an employee or a business owner. That is the relief that is available for us as at today. But the new law have come to scrap that from 2026, either as an employee, either as an individual, you will not be getting what we call consolidated relief allowance anymore. You will be getting what we call the rent relief allowance. And what is the basis for the rent relief allowance? In saying 20% of your annual rent. So if as a business owner your annual rent is 1 million naira, it is in 20% of that is what is going to qualify as your rent relief allowance, or 500,000, whichever is lower. So what does that mean is that if your rent, 20% of your rent is higher than 500,000, that means you have to take the position of 500,000. So these are the key eligible deductions that individuals, employees in employment, business owners, directors in companies that are filing their own personal income tax. These are the allowable deductions that you are allowed to get against your income before you charge your tax to that your taxable income. These are one of the key changes for personal income tax. We also have another key part. We also have what we call compensation for loss of office. So in fact, when you hear the word compensation for loss of office, so for individuals, you might, especially people in employment, you might get compensation from your employer. Probably you are working in the factory and you got an injury as a result of that your employment, and your employer say, oh, we are going to be paying you 50 million naira because of this, for like a compensation because of this injury, or because they are probably letting you go, 50 million naira. Our current law, what is obtainable is that if your employer or any form of income or money you are receiving as a result of compensation for loss of office, if it's above 10 million naira currently as of today, you are going to be subject to 10% on the excess of that 10 million naira for capital gain tax. So let me make it practical. So if they are paying me 8 million naira for compensation for loss of office today, then I'm going to walk away with that 8 million naira. But if today my employer is paying me 11 million naira for compensation for loss of office, what is going to happen is that the excess above 11 million naira is 10 million naira, is 1 million naira. So they are going to charge me, they are not going to pay me the 11 million naira. Instead, my employer is going to deduct 10% on that excess of 1 million naira and pay me the balance. That is the law as of today. But what this new tax law did is that it went further to increase the threshold to 50 million naira. So what is it saying is that from 2026, if as an individual or a business owner, you get any form of income we call compensation for loss of office below 50 million naira, you are not going to get any deduction. But if it's above 50 million naira, then the excess of above 50 million naira will be subject to a tax rate of 30% in that case. Like, that's the key changes that has to do with compensation for loss of office. We also talked about that a Nigerian resident, if you are living in Nigeria and you earn income from multiple sources, even beyond Nigeria, I'm living in Nigeria but I earn income from abroad and all that. What the law is saying is that as an individual, you will be taxed on your what we call your worldwide income. That is all income you've earned from all sources, even the one outside Nigeria. But however, the provision went to give room for what we call like a unilateral tax credit, that even if you are taxed based on your worldwide income, you still have the ability to offset your total tax that you're liable to, minus the tax that has been deducted by your foreign employer or you paid in other foreign companies. That is the scope. So it has expanded that in Nigerian residents, you'll be liable to tax on all the income you make worldwide. That is from all multiple sources. But at the end of the day, if that country does not have a double taxation treaty with Nigeria, you have the ability to use whatever tax you've paid in that foreign country to reduce the actual tax you're expected to pay in Nigeria. So we also have another key provision in this personal income tax that talks about what we call benefits in kind. Basically, many people in employment, especially for employees, you might come across what we call benefits in kind. So what does benefits in kind means? These are benefits you enjoy, not cash benefits. They are not cash benefits. These are benefits you enjoy as a result of your employment with your employer. So the tax law says that, okay, currently now, if your employer gives you an official car, let's say that car is worth 10 million naira, ordinarily that's like benefits in kind, because as a result of your employment you're enjoying that benefit. What the law stipulates is that when you are calculating your income at the end of the year, you should take 20% of the cost of that car and add it as your income, because you've enjoyed the benefits from that car. So she take 20% of the cost of that car, and if you cannot determine the cost of that car, then the fair value should be used for that purposes. So this new tax law now talked about capping that even for employees that enjoy housing benefits from the employer. So it says that you be subject 20% of the value of that house should be added to your income because you've enjoyed that benefit. It also went further to talk about the part of asset, to say if you enjoy any benefits, any assets that you enjoy any benefit from employment, then 5% of the value of that asset should be taken as deemed income for you when you are computing your personal income tax. But however, when we're talking about assets, it basically exempts some certain work tools and equipment necessary for it to work. So I'm trying to make that clear, that I'm working for my employer now. He gave me a laptop. I need to use that laptop to carry out my work. So that is not going to apply in this case. So because that work tool or equipment is necessary for the work. But if my employer gives me like a PlayStation, I don't need a PlayStation to get my work. But what it means is that 5% of that asset, that PlayStation my employer has given me, I'll need to, when I'm computing my personal income tax, I'll need to take 5% of the value of that PlayStation and add it to my income, regardless of where that money was not paid to me by my employer. But that's the concept of benefits in kind. Non-cash benefits enjoyed as a result of your employment. There are some certain categories that you will need to add them to your income for tax purposes. Then another key changes that we have for personal income tax, the law went further to mandate every individual. So when we're talking about every individual, even in employment, if you're an employee in employment, you're a business owner, you're an artisan, as long as you're an individual resident in Nigeria and you're earning income in Nigeria, regardless of the amount, you are mandated by law to file your own personal tax return. One of the things we see in practice, that we have this knowledge gap, that many individuals in Nigeria don't know that they're expected to file their own personal tax return. So beyond, even in employment, for us in employment, beyond your employer deducting pay from your salary and filing its own employer's return, as an individual in employment, you're expected to go and file your own individual tax return with your state internal revenue service, because there are possibilities that your sources of income is not limited to your employment income. So what does this mean? That you might have other sources of income. So you need to declare and file that tax return and pay the appropriate tax due to the relevant tax authority. So this new tax law is mandating every individual to make sure that you are filing your personal tax return, because if you don't, there is also a penalty for that. But the new law also gave a provision to say that a relevant tax authority, so when they mean relevant tax authority, they mean the state tax authority, may issue guideline for filing of simplified income tax return by low income earners or persons operating in the informal sector. So what does it mean is that imagine your barber, your carpenter and others, all of them are also mandated to file their personal tax return. But however, the law is saying that the tax office or the tax authority can decide to come about to say, oh, for if you are within this informal sector or you're an artisan, this is how you go about filing your tax return, or this is the particular range of tax you're expected to pay every year. Because I know some states across Nigeria do that based on your the sector you operate. Maybe you are a carpenter or you are a tailor and all that. They already made it simple for them that, oh, if you are a tailor, just pay 20,000 annually as your tax. So the law is saying that each state tax authority has the responsibility to release a guideline for those certain categories of people, those low income earners and people operating in the informal sector. Which is why I've highlighted previously that we're expecting the tax authority to come up with a guideline for most of these provisions for clarity, so that everybody is going to know how to plan ahead of 2026. So these are the key changes that has to do with personal income tax for individuals and business owners in Nigeria. We also have the fourth tax we are talking about is the withholding tax. So this same committee released a withholding tax regulation sometime last year, July last year, making clarity on what are the changes that has to do with withholding tax for business owners in Nigeria. So one of the key changes is that it said if you are a small business owner, you are exempted from deducting withholding tax from a supplier's invoice. Remember, when we are using the word small business owner, you need to know that small business owner for tax has to go with the definition of what we call a small business owner. So it's saying that if you're a small business owner, you are not mandated, you are exempted from deducting withholding tax from a third party. Number one, as long as that third party has a TIN number and the transaction, your transaction with that supplier is not more than 2 million naira in a month. So now let me make it clear. Yes, I'm a small business owner, number one criteria. But if you are dealing with a third party, but its transaction is above 2 million naira with you for that month, you are expected to deduct withholding tax. So you are seeing that this thing is not just straight. There are a lot of criteria or things that need to be met. Yes, I'm a small business owner. I'm not expected to deduct withholding tax. But if that supplier, my transaction with that supplier for that month is above 2 million naira, that means I'm expected to deduct withholding tax, regardless of me being a small company. So that is one of the key provisions that the withholding tax regulation tried to highlight. In previously, we had this case of how will a business know when to deduct, when should I deduct, what is the rate for deduction and all that. So the new tax law now clearly define that once you are into sales of goods in Nigeria, your transaction is subjected to withholding tax at 2%. But there is also an exemption only if in the case that you are the one manufacturing that good and selling it. So let's take for instance company ABC. Company ABC sells bag. So once company ABC does transactions with company XYZ, once it's supplying company XYZ, company XYZ now need to know, is company ABC the manufacturer of the bag, or it just purchase that bag and resell to me? So because for every transaction in Nigeria, once you are doing a sales and supply of goods and services, you are expected to deduct withholding tax at 2%. But if the person you are dealing with is the manufacturer or is the one that produced that goods, then you are not expected to deduct withholding tax from that person's invoice. Also, the withholding tax also clarify, list out transactions that are exempted from withholding tax deduction. So what does one of them is across the counter transaction. So what does across the counter transaction mean as per the withholding tax law? It talks about transactions that as a small business owner you are incurring it like right away, and right away you are making that payment instantly, either via cash or via electronic transfer. So what does this mean? Is that am I coming to your store to buy something? If I'm paying to you, I'm paying to a third party. So if I'm paying to you instantly, I'm not expected to deduct withholding tax. But if I say I'll pay you later, or maybe next 2 weeks I'll pay you, the law is already clear what it defines across the counter transactions. So if you are not making payment for that goods instantly, either by cash or electronically, then that transaction should be subjected to withholding tax. It does not qualify for across the counter transaction. We also have transactions, supply of diesel, petrol, those ones are also exempted from withholding tax. Supply of agricultural produce and all that are also exempted from withholding tax. Then just to speed up, we also have withholding tax transaction on transactions that the supplier does not have a TIN number. So what does this mean? If as a small business owner, I issue an invoice without putting my TIN number on that invoice, what the law automatically says is that instead of me to deduct maybe 10%, if the official rate is 10% for that transaction, I should deduct times 2 of that rate, which means 20%. So what this law is just trying to do is to make sure that everybody is registered for tax purposes and tax compliance. So what does this mean? So most times you might find yourself in those kind of tricky situations that someone rendered you a service, is sent you an invoice without including his TIN number on that invoice. The law expects you to charge him withholding tax times 2 of the rate. Or in a more emphatic case, you might either request that person to send you a new invoice clearly stating his TIN number, because you have to save yourself as a small business owner. Because when your business is being faced with tax audits and you are providing evidences of those transactions, and the taxman picks an invoice and say, but this supplier did not put his TIN number on this invoice, what was the rate you charge him for the withholding tax? So if it's not times 2 of that rate, then you'll be on the receiving end trying to pay the other balance. So it's expected that before you pay a supplier any invoice, ensure that it includes his tax number on that invoice for the good of your own business. Then you also have the penalty for not deducting withholding tax. So in this other session, I just highlighted what I just call key provisions, other key provisions that does not really fall under some aspect of the 4 taxes we mentioned. So we talked about the definition of small business owner, which I've highlighted. So this new tax law also gives room for collaboration between different tax authorities. So take for instance, what it's trying to say is that you might be undergoing an audit by FRS. So there's possibility that in the case of undergoing audit by FRS might request LRS for a joint audit. Oh, we feel this business owner is not compliant, come and join us on this audit. So the new tax law has given room for collaboration based on agreement between those tax authorities, that a federal tax authority can collaborate with the state tax authority and audit a small business owner. We also have another key provisions that does not mandate a small business owner to prepare its audited financial statement to file its tax return. You know that as small business owner, you are expected to file your tax return, and one of the requirements is preparing your audited financial statement. But the law is saying that, okay, as a small business owner, you are not mandated to prepare your audited financial statement. However, you are still expected to prepare a statement of account. But statement of account will still have to show your profit and loss, your balance sheet, your cash flow, and other items for disclosure, but not necessarily an audited account. Also, we also have this new tax law introduce some more stringent penalties for non-filing. Take for instance, currently, the penalty for non-filing your VAT returns on time is 50,000 the first month and 25,000 subsequent months. So this new tax law from 2026 increased that penalty to 100,000 first month and 50,000 subsequent months. And the same thing also in the late returns filing for company income tax. Another key provision in this new tax law talks about that a statutory body that award contract to an unregistered person for tax purposes is going to pay a penalty of 5 million naira. So what this law is trying to say is that, because they are trying as much as possible, many individuals and businesses are registered for tax purposes, because you see a lot of business, they have been registered with CAC, but they are not still registered with FRS for tax purposes. So the law is saying that for you as a company, if you go and deal with any company that is not registered with FRS or either the state tax authority for tax purposes, we are going to fine you 5 million naira. So this means is that no company will want to deal with any business owner that is not registered for tax purposes, because almost some big companies, one of the prerequisites for them allowing you to become their vendor, you need to provide the evidence of the tax registration. So it's very important that you register with the tax authority for tax purposes. We also have the part that talks about an individual should not be fined once say bribing a tax official. If not, you'll be subjected to a penalty of 500,000. And a company too should not be fined bribing a tax official. If not, you'll be subjected to a penalty of 2 million naira. Another key provision we have here is mandatory disclosure of tax planning by taxpayer to the tax authority. So what does tax planning mean? Tax planning means, as a business owners, there are certain provisions in the law that you can take advantage of to reduce your tax. So what the government is saying is that, oh, if you are taking advantage or you have put some tax planning measures in place, you must disclose it to the tax authority. Because if you don't disclose it, there's also penalty for not disclosing any tax planning measure you take as a business owner to the tax authority. We also have this new law establishing what we call the office of the tax ombudsman. So what does it mean is that this office is going to be like an impartial office or an impartial body between the tax authority and the small business owner. So because some tax authority might just give you, oh, your liability is 200 million naira, and you are a small business owner, you know that that 200 million is not a liability. So you could write to the tax ombudsman, who is going to stand in as an impartial arbiter, trying to resolve any complaints relating to tax, levies, regulatory fees, and custom duties. So we are still expecting guideline of how this tax ombuds office is going to operate. But it is also important to know that there are also limitations of this office. So because because one of the limitations of this office is that any case that is already before the court of law in Nigeria, if you are dragging a case to the tax authority and that case is already in front of a judge or in front of any competent court in Nigeria, you cannot now take that same case again to the tax ombudsman. It does not have power over that, and it also does not have power to determine the liability. Take for instance of the example I made that, oh, if the tax master liability is 200 million, this tax ombudsman cannot say, oh, your liability should be 50 million. What the role is going to play is just going to, oh, how do we resolve this how do we resolve this compliance? So, but it does not have the power to determine the tax liability for any tax for any small business owner. Then we also have the part that for small business owner, it's expected that at the point of you trying to close or seize your business, you are still expected to write to the tax office within 30 days after you've closed that business. Because in my experience, I'll see a small business and I say, I'm no more doing business. I've stopped using the account. I've closed the shop. I've done all that. They don't understand that even if you are not doing business, you still have a tax obligation to fulfill to the tax office. And what the law is saying is that if you've closed your business or you are either temporarily or permanently, they are expected to write to the tax office within 30 days, notifying them that, oh, I've closed my business. So what the taxman will do is he's going to place your tax number on either dormant or suspension. So probably when you want to come back to business, you can now write them again to say, oh, reactivate my TIN number back. Now I'm back to business. Because if you don't do all these things, you might be surprised that yes, practically you've closed down business, but the taxman might still subject you to some tax obligation because you never wrote to them officially that you've closed business. We also have other aspect of saying the tax authority has within 90 days to respond to a taxpayer objection. And another key part is that if a small business owner is winding up and engages the service of a liquidator, it's saying that that liquidator, before you share whatever is the remains of that business owner, take for instance, company ABC is winding up and the total amount to be shared for the business owner or across other people the business is owing money is 10 million naira. So the law is mandating that liquidator, he must make provision or ensure that all taxes has been paid in full. So it's whatever is left that he shares among the business owner or among the people that want to share whatever the business asset that is being liquidated. So it's very, very, very important. So these are the key other key provisions that come across with this new tax law for small businesses in Nigeria. So we'll move to the part talking about tax filing and due date and penalties, because as small business owners, to be at the top of your compliance, at least you need to know what is the due date, and if I'm not complying, what are the penalties. So let's start from company income tax. So for company income tax, the due date is 6 months after your accounting year end. So accounting year end means the period with which you make up your accounting, your year of account to. So this would have been defined at the point you are registering with the tax authority. But most business owners run with December as their year end. So what does this mean is that as a business owner with December as your year end, you have just 6 months after December to file your company income tax return with the tax authority. And if you don't do that, there is a penalty. And what is the penalty? Penalty for non-filing is 25,000 for the first month and 5,000 for every other subsequent month the failure continues. We also have the other party saying the penalty for if you fail to pay your company income tax. If you have a tax that you are expected to pay for that year you filed, there's a penalty for not payment of tax for your company income tax. 10% of the amount you fail to pay, and interest at the current monetary policy rate, depending on that time of the tax is due. So because as of today, the current monetary policy rate is 27.5%, and that rate is also compounding. So take for instance, if since 2018 you've not paid company income tax, and once the tax authority established that you're owing company income tax, you will pay the tax, you will pay penalty of 10% of the amount, and you are going to pay interest on that amount from 2017 to date. So you can see that the cost of non-compliance is even very, very expensive to comply, because I find it that you see a lot of small business owners, oh, I cannot pay, how will I pay now? But they don't understand that if the law catch up with you, the cost of not complying will be far very more expensive than you doing the right thing at the right time. So the second tax is we have the value added tax. So what is the due date for filing your value added tax? It's 21st of every month. So what it means that if we are currently in August, so for any transaction I do in August, I have 21st of September to ensure that I've filed my value added tax with FRS. And what are the penalties that we currently have for value added tax? Number one, failure to register. Failure to register, that means I've incorporated my business with CAC, but you fail to register with tax authority for VAT purposes. So if you fail to register, you have 50,000 the first month and 25,000 subsequent months. That is one penalty under the VAT Act. We also have penalty for non-filing, which is 50,000 the first month, 25,000 subsequent months. We also have the issue of penalty for non-payment of VAT. So imagine you've charged your customer VAT and you fail to remit that VAT to the tax authority. When you are being audited or they are carrying out the dex review on your records and they establish that you have VAT outstanding or VAT you're expected to pay, what is the penalty? 10% of the amount you're expected to pay plus interest and penalty, which is going to be compounding. Then we also have the part of failure to issue a VAT invoice. So many people are doing businesses that you don't issue a VAT invoice to your customer. There's also a penalty for that. They'll tell you 15% of the cost of goods sold, which you fail to issue VAT invoice. So these are the penalties that, for compliance for VAT, every small business owner is exposed to. We also have personal income tax. What is the due date for personal income tax? Remember when I talked about personal income tax, I said that we have the personal income tax from the payee angle and from the direct assessment angle. So personal income tax from the payee angle, what is the due date? It's 10th of the following month after salaries are being paid. After salaries are being paid, it's very critical to note that. So we have the due date for direct assessment, which are basically for individuals and business owners. You have 31st of March every year. So what does this mean is that because tax is paid based on preceding year basis. Now currently we're in 2026. As a business owner, you cannot come to say, I want to pay my 2026 tax. You can't pay it now. It's until you get to 2027. You now say, oh, for 2026, how much did I make? Which is based on the preceding year. How much did I make? Oh, this is my income, this is my tax, this is what I'm expected to pay. But for individuals, directors, and business owners, you have up until 31st of March every year to ensure you file your tax return and pay the appropriate tax that is due. And in this case, what is the penalty for late filing? You have 500,000 in the case of a corporate body, which is a company, and 50,000 for individuals that fail to file its tax returns. We also have the penalty, which is the same thing applicable to VAT and company income tax, 10% of the amount of tax payable and interest and penalty. We have withholding tax too. What is the due date for withholding tax? You could see that I separated this withholding tax due dates into two, either for FRS or either to the State Internal Revenue Service. The due date for filing withholding tax due to FRS is 21st of the following month. The same thing with VAT. But if the withholding tax due is due to the state, it's 31st of every month for any withholding tax you are expected to pay to the state. So what is now the penalty? Now, the penalty is divided into two. Failure to deduct. Let me be specific. You remember that the small business owners, withholding tax arise at the point you are expected to pay a third party. You are expected to deduct from his invoice and pay him the balance. But if as a small business owner, because of information gap or you do not know or oversight, you pay that third party in full, the government is still going to penalize you for that. So the penalty is 40% of the amount not deducted. So if you are expected to have deducted 100,000, but you paid that third party in full, the government is going to slam a penalty of 40% of 100,000, which is 40,000. That's the penalty you are going to pay. We have another angle of failure to remit. Some small business owners deduct, but they don't remit. So what is the penalty for them? 10% of the amount not remitted, applicable interest and penalty, and the current MPR rate, inclusive of the amount they deducted. So that is the penalty for withholding tax. So I think we've mentioned the tax filing due dates for the four common taxes for business owners and the penalties that they are exposed to if they don't comply. So I'll be moving to the next slide. Now we are trying as much as possible. Let's make it practical. Now 2026 is less than 5 months. What are the things that the small business owner you're expected to do or you're expected to put in place now? Practical step for compliance for every small business owner. Number one, we talked about that you need to formalize your business registration. You might see a lot of people are saying that show stores, show ventures, but you might find out that those business that have been calling I have a shop, I have a business, is not even registered with CAC at all. So it's important that the first step for compliance that you need to ensure that your business is registered with CAC. So if that business is registered with CAC, the next step is to move further to say, oh, I've registered this business with CAC. I need to take a step further by registering with the appropriate tax authority. So in this case, you have to ensure as a business owner, you've registered with FRS, and any depending on the state you're operating for, you might need to register with that state tax authority. But for us in Lagos, you need to register with Lagos State General Revenue Service for different tax compliance purposes. Number three, very, very important, because we're just talking about tax, but tax cannot do without accounting, proper books. So as a business owner, you need to ensure that you've maintained proper books of accounts. And that is where like FAGVBS comes in, which is the challenges we're trying to solve for so many small business owners in challenges, that they fail to keep proper books of accounts of their income, of their expenses, of their assets, or what is even their payroll. Because even as a business owner, you say, oh yes, you want to pay tax, but when you don't even know what is your profit, how do you then pay tax? When you don't know what are your expenses, how do you then pay tax? So it's very important, practical as possible, ensure that you maintain proper books of account for your businesses. That's very, very, very important. Number four is that as business owners, I've highlighted what are the due dates, what are the penalties. We need to ensure that you plan for this filing regularly. How do you plan? Even for us as tax consultants, what we do is that so we don't lose track of this filing due date. We try to set up like what we call a tax calendar or a checklist to say, oh, on or before this date, I should have filed this VAT. On or before this date, I should have filed this pay. I should have done this filing. So it's important that you set up, like, you can call it a tax calendar that helps you track the due dates for all your filings to make sure that you are up to date for your tax filing come 2026. Another part is you need to conduct like a tax health check. So what do I mean by this is that you must engage. So why I use the word must is that you need to engage a tax consultant or an accountant to review your past compliance and identify if there is any previous liability, help you identify any liability and prepare for 2026. So why am I saying this is that you see some business that has been incorporated since 2017, 2018, 2019, or as long as how many years back, but they've not even done any tax compliance at all. So it's important to engage a tax consultant to review your past records or review your business holistically. It can help you identify, these are the liabilities you are exposed to, and these are the things you need to do ahead of 2026. So that is why you need to conduct a tax health check to know where are you and where you need to be going forward before this new tax law comes into effect. Now, for another practical step, it's very, very important that as a business owner, You need to be ready for cross check. So what do I mean is that for business owner, your primary source for any financial record mostly is your bank statement. So you need to ensure that your bank statements and your books of account or your business transactions align with your tax filing. So what do I mean is that imagine you are reporting in your tax filing, say your income is 100 million, but in your bank statement, the taxman is seeing credit inflow of like 400 million. Why is there misalignment? So if you don't have proper records to explain to, oh, the difference of 300 million naira is a loan or not an income or anything substantial, then you are basically in for a more difficult position with the tax people, because these are the things that basically triggers tax audit or tax issues from the tax authorities, because it's a red flag. If you give the taxman your bank statement, you see total inflow 1 billion naira, but in your tax filing you say your income is 1 million naira, it does not tally. You will be very curious to know how this person bank statement is showing 1 billion naira credit, but the tax account in fact is showing 1 million naira income. So it's basically a trigger for the tax people, and it's basically a red flag. And if you don't have proper documents to support the reason why you reported it that way, then it's going to be a very difficult thing for the business to defend that. Also, it's very important that come 2026, even currently, that you treat tax notice as urgent as possible, because in within the tax law there are deadlines and there are periods to respond to the tax office, tax authority. So what I mean is that you might get a letter from FRS today. By law, you are bound within 30 days to respond to the tax authority. And that if you don't respond, whatever that is in that letter becomes final and conclusive. So what does this mean is that you see a lot of small business owners, the tax people are going to send them letters, either, oh, you're expected to pay this amount. Some of them will just shoot letter. Why will I pay? What is the government doing for me? Yes, we all know what is the government doing or what is the government not doing. That is not a case. But as a business owner, you need to ensure that you respond to that letter within 30 days. Because if you don't do that, then it becomes final and conclusive by the law. So it's very important that come 2026, because you need to ensure that once you get a tax letter and notice from the tax authority, you have to treat it with all urgency. So the final one here, we also need to ensure that all your staff, at least the basic tax compliance knowledge they need to be aware of, you train them on the basic ones. Take for instance, you are selling a good that is exempted from VAT or that is rated, but your staff does not know, and the customer walks in asking him some questions or why is this, why is that. So it's important that you train your staff on the basic that needs to do with tax for compliance purposes, because most times as a business owner you might not be in the office or in the shop every time. So you basically have a staff. So you need to ensure that your staff has the basic tax knowledge about tax compliance. Then the final one is learn to seek professional help early. So what does this mean is that don't wait for issues to arise before you say, oh, you need a tax consultant. Don't wait for issues to arise before you say, oh, I need an accountant. Because I keep saying from experience, the only time you see small business owners looking for tax accountant or looking for consultant is when FIS have slammed them with an huge liability. So you don't have to wait to say until they bring tax letter before I look for a tax consultant and all that. By then it will be too late and the damage is already done. So it's important that you seek professional help very, very early on time. I always want to advise businesses that at the point of you registering your business, you need to have an expert that will hold your hand through the ropes of tax compliance in Nigeria. So our final slide for today, we'll be looking at what tools and resources are available for small business owners for tax management in Nigeria currently. So the first one is that we have the tax portals. Either FIRs or the relevant state tax authorities have their different tax portals that they use for tax management. So it's very important that as business owners, you are familiar with the tax portals for your tax filing and all other things. Also, you also need an accounting or tax software because I had mentioned earlier that the foundation of your tax is accounting, that is records. So you might have transactions that are voluminous. To simplify all these things, you should ensure that you have proper accounting software to help you manage these transactions that help you maintain your proper books of accounts in case of any tax issues. So it's very important that you have this tax and accounting software. Also, number three, we have what we call some companies, depending on the size, they have what we call payroll and HR compliance tool. This tool just helps them calculate the appropriate payee, pension, and other statutory deductions that are expected to comply with. So those are depending on the size of your business. If you want to do payee and all that, you could, there's some HR tools or payroll calculation tools that help you calculate the payee and pension for you to remit on behalf of your staff. Then number two are resources, that is professional support services. Yeah, you just have to ensure that you engage a tax consultant for tax planning, review, audit, and filing assistance if it's becoming overwhelming for you as a small business owner to do that. Then another two or resources that a small business owner needs to, you can check out is education tool and resources. Most of these tax authorities carry out webinars, just the way LSCF2 is carrying out this webinar. Most of these tax authorities like FRS, LRS, from time to time, they organize awareness on the tax compliance or tax obligations for business owners. And even on their social media handles, they usually put some key nuggets that for business for compliance. And they also have YouTube pages and newsletter they release from time to time. They can also help you for tax management so that you're also aware. Then finally, you need to have what we call template or checklist, which is what I've highlighted earlier, like a tax calendar and template that helps you keep track of your tax filing obligation, either on monthly basis or on annual basis, so that you don't lose track of it or you don't get overwhelmed. So if you have a tax calendar, it helps you track what are the due dates and the things you need to do. You also have a template either for calculating some taxes, either payee or VAT, as the case may be. So these are the tools and resources that are very important for every small business owners for tax compliance in Nigeria. So I think that brings us to a brief end of this session where we will give room for questions and answer session.
Thank you so much, Mr. Sheung, for that very insightful session. So I know that a lot of us have questions. I can see that there are two questions already in the Q&A box. But just before we start answering the questions, I will be launching the poll now. Please kindly help us fill this poll, as this poll will help us serve you better at the Lagos State Employment Trust Fund. So let me read out the questions that I have here. So Aziz Yesufa is asking, which goods and services are taxable?
So will you really take all the questions, or as you ask, I should answer?
Okay, I think you can just take the questions as I ask them.
Okay. So I think probably that question, probably it's not really clear. So what I mean is that all goods and services, if you are doing business in Nigeria, your goods and services you are selling or you are rendering, it's taxable. I think you want to ask what goods and services are not vatable or vatable, because we have taxable everything you are selling or goods and services you are doing are taxable. Taxable in the sense that, oh, I sell rice. At the end of the day, you supply rice, yes, you pay company income tax. But you are looking at it from the VAT angle. Is sales of rice vatable? No. So goods and services, as long as you are doing business in Nigeria, you are subject to tax. That means it's taxable. The only condition that you might not have paid taxes if, oh, you are within the threshold of the small business owners, or there are other incentives for you to enjoy. So goods and services enjoyed or done in Nigeria are taxable. But if you are talking about vatable, that means what goods and services are vatable or what goods and services are not vatable. So there are two different things. So I don't know, me, maybe we might need to rephrase this question. But to answer his question, all goods and services carried out or done in Nigeria are taxable.
Okay, I hope that answers your question, Aziz. So just before we take the second question, please, and please, there's a poll that's been launched on your screen. Please kindly help fill this poll, as this is very important in us getting your feedback, and this will help us help you better and serve you better. Thank you so much for those that started filling. Please do fill this poll. Thank you. So the second question is from Benedict Anyebe, and he has asked, I registered a small business, but I'm not able to cope with the business as planned due to different factors. I have team and I want to keep it or maintain it. However, I'm now employed and my employer pays my tax to LRS as an employee. Can this tax paid by my employer sustain for my registered business, because I intend to use the registered business in future?
Okay, so I understand that question. So it cannot suffice because there are two different taxes. Number one, the tax that your employer is deducting from your salary is personal income tax, which is on your own income, on your employment income. For business, I assume that business is talking about is a limited liability company or a business name. So for business, the taxes is expected to pay is company income tax. So personal income tax that has been deducted by your employer cannot suffice for company income tax. So there are two different taxes. So I also advise him to just write to the tax office that this business, I'm ceasing this business temporarily for now, so that they could suspend any tax obligation under his tax number, pending when he's ready to return back to the business. He can then write to the tax office for them to reactivate his tax number.
Okay, so Mr. Benedict, I hope that answers your question. So we have another question here from Temitope Oluwadare. There are two questions actually. One says, how do you charge withholding tax on artisans, that is electricians, AC repairs, and the likes? There are two questions, but okay, let me just read out the second one too. And the second one says, how do you handle materials you buy from open markets in terms of getting VAT invoices?
Okay, so 1 minute. So on the case, this has been like one of the challenges for business owners, talking about how do you charge withholding tax on artisans. So sometimes I think for any small business owners, when negotiating with this artisan, in that negotiation, they'll just call a certain price for you, 10,000. And for them, that 10,000 is like their own net. That's what I want. That's what I want you to take home. So I think for a business owner, you now need to give room, you now need to make provisions for that withholding tax by yourself, unless you and the artisan that agree that, oh, this 10,000 I'm calling, I'm going to deduct a certain percentage of it as withholding tax. And if he agrees, fine. But if he does not agree, what can you do? What if it's in the case of artisan that there's nobody that can do the work aside from him? So in most cases, in practice, the business owners just keep on paying that withholding tax deduction, because you cannot say you're not expected to deduct. But because of the way it's done informally, You agree with the artisan, you agree net amount, how much you want you to pay him. But if at the point of agreeing with him and you let the artisan know that this amount you are calling, I'm going to deduct a certain percentage for tax, then might tell you no, I'm not doing it again. So those are the challenges some business owners face. But the right thing to do is that that company will just have to be the one to pay the applicable withholding tax since they did not deduct, because that transaction most likely is subject to withholding tax deduction. So we're talking about how do you deal with expenses or transactions you get at the open market. How do you get VAT invoices? So that is why, because this is also another challenge, which is why the government is clamoring as much as possible. Everybody should register for tax purposes, do the right thing, and what to do. But because you can't go to Lagos and you buy something for the business, unless that business, some of them are kind of sophisticated that yes, they'll just give you a paper invoice. But because most of them, they might not put it at the face of their invoice to say that, oh, this goods they are buying is 10,000, VAT 7.5%. But some of them, they've inculcated the VAT element to their invoice, to their pricing. But I think the first step for that is to just even ensure you get like a receipt and invoice. Then I now think that, because like I said, sometimes tax is like based on negotiation, sometimes with the tax people. If you can provide evidence, even though that invoice for this open market scenario, even though that invoice is not showing VAT invoice, you can explain to the tax people that these are market people and most of the prices are already VAT inclusive. So if I'm selling something for you, that price I've given you is inclusive of VAT. Unless you want to tell unless you want to tell the businesswoman to redo another invoice and all that. But the practicality of it is another key aspect to this. But most cases, it's better you get the paper invoice that, even though it's not showing VAT, at least first of all you even have a documentary evidence. Then you can then explain to the tax people that these are open market transactions and these guys will not issue you VAT invoice, because most of the goods they are selling are VAT inclusive. So the prices, they already factored VAT in it. But the goal at the end of the day for government, I think, is to upscale or ensure that every small business owner, either open market or in the store or boutique or anywhere, they take tax compliance serious and do the right thing. Hopefully, in some years to come, many business owners will get to that stage, regardless of where you are selling, either open market or in the boutique, in offices or stores. But those are the challenges that we have currently.
Okay, I hope that answers your question, Temitope. I have question here. Okay, I'm guessing you want to you're asking if you can have the links to the slides. So please, the slides will be shared with you by your email if that's what you're asking. But the question is, can we have the link to the tools and resources shared? So all of that will be shared with you by your email. I have another question here saying, for business name, who gets the tax? Is it LIRS or FIRS? For limited liability company, who gets the tax? SIRS or FIRS?
Okay, so I will just do like a brief tax compliance for that person. So now, for business name, that is Ventures Enterprise. So in the eyes of the law, it's still seen as a one-man business. So the tax obligation still rests on the owner of that business. And in Nigeria, for taxes applicable or payable by due by individuals are payable to the state inland revenue service where you reside. So in this case, Lagos State. So because a business name is liable to different taxes. So if we pick company income tax, a business name is not a company, so it does not have company income tax obligation. So if we pick VAT, a business name is expected to comply with VAT. But however, for VAT, we only have one tax body, like one tax administrator, which is FRS. So for VAT, even if you're a business name, limited or incorporated trusts, NGO, your VAT obligation is due to FRS. FRS. So for business name, you are not expected to comply with company income tax, but your personal income tax is to LRS. But for your VAT as a business name, it's to FRS. So on the other hand, for a limited liability company, which is like a company, your company income tax is payable and due to FRS. Your payee for your staff, if you have staff as a company, a limited liability company, your payee for your staff is to LRS because it's personal income tax. So anything that relates to personal income tax is payable to the state. And for a limited liability company, if you have directors, the personal income tax of that director too is payable to LRS. So for a limited liability company, if you have VAT, it's payable to only FRS. So for withholding tax parts, so for the withholding tax aspect, if you deduct withholding tax from a third party that is registered as a limited liability company, you're expected to remit that withholding tax to FRS on its behalf. So if you deduct from that withholding tax from an enterprise or a partnership, you're expected to remit that withholding tax to the state because both of them tax obligations differ. So if you deduct from a limited liability company, that money is deducted, paid to FRS on its behalf. So if you deduct withholding tax from an enterprise, help that person remit it to the relevant state tax authorities, in this case LRS. So for VAT, it's basically FRS, regardless of either business name or limited liability company.
Okay, I hope that answers your question to who asked the question. For Mr. Cornelius, you're asking if the slides will be shared with you. Yes, it will be shared with you via email. So this is one of the reasons why we have requested that you please fill the poll so we can have all of this information and share with you after the session. So please, for those that are yet to share, to fill the poll on your screen, please do fill this poll as this is very important. So Temitope has another question here, and Temitope is asking, how do you deal with clients that deduct but don't remit withholding tax from your service?
Okay, so from a tax consultant angle, so we have some clients that are third party deduct withholding tax from their invoices, but they don't remit on their behalf. So what is the best thing to do is to tell your consultant to write to that client, because it's kind of nice because you cannot go and force the money out of that your consultant that your client's bank account now. So you just write them officially, and in some cases you see taxpayers going ahead and reporting that client to the tax office, so the tax office will go after them personally. So it's just two options. You have to write that your customer officially that I have noticed that you've deducted so percentage of withholding tax and it's not reflecting on my tax portal. So because another case is that it might not be a case of them not remitting, it might be a case of them remitting wrongly. So you will see that some of your client has deducted withholding tax, but they've remitted it wrongly. That's why you're not getting the withholding tax credit. So you need to first of all establish, is this a case of actual not remitting or they've remitted wrongly? So that is the first step, is to write to them that provide evidence of withholding tax deducted from my invoice, evidence of remittance. So if the client is unable to provide evidence that he has not remitted the withholding tax, then write to him that kindly help me remit my outstanding withholding tax. And if he does not still oblige, then you can go a step further by reporting him to the tax office. So basically go after him on your behalf.
Okay, Temitope, I hope that answers your question. So for those that have questions, please, you can still drop your questions in the Q&A box or you can drop them. Okay, Igbabo is asking, how do you file that you have a loan as an enterprise that was collected as an employee with a 9 to 5. Okay. So I don't know
So,
if you get the question.
no, please come again.
Okay. How do you file that you have a loan as an enterprise that was collected as an employee with a 9 to 5?
Okay, so I'm just trying to get the rationale why you're saying you need to file the loan. The only part in this section we talk about loan is that if you took a loan from the bank, if you took a loan from the bank and to build your own house, then interest on that loan, it can be allowed as a deduction against your personal income tax. So for him as an individual, what he's doing is that if you find your personal income tax at the end of the year, your income from your employment and income from your enterprise, that loan, if there's interest on it, it's not allowed for it's not allowed for tax deduction. So there's not really much correlation between the loan you took from your 9 to 5, because your tax filing, the only interest on loan that you can claim as an eligible deduction is the one which you took to build your own house. Because the way the tax man think is that if it's that way, a lot of people will just go and be taking loans with high interest because they're trying to reduce their tax. So that, oh, my interest, I'll use to reduce my tax I'm going to pay, to reduce the income I'm expected to charge to tax. So it's only interest on loan taken as an individual used to build your own self-owner occupied house. Those are the interests that you can use to reduce your personal tax filing at the end of the year.
Okay, I hope that answers your question, Ibabo. I have one more question, and it says, in the case of bank statements to authorities, how do you explain that all the income on the statements are not your profit? What rate of withholding tax can a client deduct on service charge on an invoice?
Okay, so to the first question, talking about how do you align your bank statement with your, let me say, your audited financial statement. So that is where we've emphasized about the need for maintaining proper records. Like one of the tools we talk about for resource management is accounting softwares and all that. So which is what I started earlier talking about FAGVBS. So if you are able to maintain proper records as much as possible, you have supporting documents to show that, oh, because ordinarily we all know that not all inflow into the bank account constitutes turnover for a company, but without proper document or proper account, it's very difficult to you to explain to the tax man. So you took a loan from the bank or you took a loan from a friend, you paid it to your company account, and you and your friend don't even have a loan agreement, or you don't even get an offer letter or a loan agreement with the third party. How do you now substantiate your position with the tax authority that, oh, this inflow that came into this account, it's a loan? And one funny thing I've seen some business owners does is that they'll take loans, they pay the loan into their company's account, and when they're repaying that loan, they pay from their personal account. So even if you're arguing to the tax man that, oh, this amount is a loan, no, they'll say, okay, show us the repayment leg. They can't find the repayment leg in that same company account. You now tell the tax man that I paid from my personal account. So it's not it does not really make sense. So it's very important that in order to make sure that you are aligning your bank statement to your audited financial statement that is being prepared annually with proper records and supporting documentation, then you don't have any issues to explain to the tax people, because it's a matter of facts. Once you have fact and evidence, then you can defend that position.
Okay, so thank you so much. I guess that's the final question that we have on this session today. So please, can we appreciate our facilitator in the chat box, please? And while we do so, there's another poll that's been launched on your screen. Please kindly help fill. Your feedback is very important to us. Thank you. So please, can we appreciate our facility. Okay, I think we have another question from Ismaila, and is saying, as a business owner, do I pay tax while servicing loan?
So we need to understand that yes, as a business owner, you're asking, do you pay tax while servicing loan? Yes. So the loan you took is for what purposes? Basically to buy goods to sell or to do something to generate income for that business. So you might take a loan for a particular purpose if that loan you took is for the business. So you took a loan and that loan you took is either to generate inflow to the business. So if you took a loan and you generated an inflow of 100,000 naira, so you have expenses attributed to that income or the interest expense. If at the end of the year you are making a profit, you pay tax. And if you are also talking about do you pay tax, if you took a loan to supply valuable goods and services, remember when you are selling that goods and services, you need to charge your customer VAT and you need to remit that VAT. So taking loan does not stop you from paying tax. It doesn't stop you from paying tax. You take a loan to do a business, you make profits from the business, then you pay tax. Then if you don't make profit from business, you can show that yes, I still don't make profit. That's why I took loan. No problem. As long as you have proper documents to show, you're not going to pay any tax. But if you took a loan to do a business, and from that business venture you make the profit, you pay tax. Unless your turnover is still within the threshold of a small company. So there are other criteria that could determine if you pay company income tax for that period. But taking a loan does not also stop you from other compliance obligations. You cannot say you take a loan and you have staff, you are not deducting pay and remitting. So you know that as a business owner, you have different tax obligations across pay, withholding tax, and all that. So taking a loan does not stop you from carrying out your other tax obligations.
Okay, thank you so much. I hope that answers your question, Ismaila. Thank you so much, everyone, for staying this far in this session. This can be, I can see so if I appreciating our facilitator in the chat box. Thank you so much, Mr. Balogun, for such an insightful session. If you'd like to reach out to FAG for further for help with your taxes, and if you need account officers, I'm very sure Mr. Balogun can drop his contact details in the chat box, and you can reach out to him and reach out to FAG if you have anything to do with your taxes and everything tax and your business. I'm very sure Mr. Balogun will be happy to help. So thank you so much, everyone, for staying this far for this session. We appreciate you, and we hope you have learned a lot from today's session. I believe that you've all learned a lot from today's session. We'll be having another session next week. Tuesday is going to be an HR advice session. It's going to be speaking on the importance of recruiting the right talents for your business. Okay, I have one more question, Mr. Balogun, just before we close. I think I will just entertain this last question before we close fully for today's session. And Mr. Benedict is asking, hope I won't be charged by FRS if I go and meet them for this complaint because it's been long I stopped the business.
Okay, so I think before going to an FRS, it's important that you engage a tax consultant for proper advice. So it gives you the options that are available to you, basically reviewing your records and telling you this is the way to go. Because sometimes, in all honesty, sometimes the tax people might also want to take advantage of your lack of knowledge about taxes and tell you that, oh, you need to pay this, you need to pay this. So I think the first step for is to engage a tax consultant for proper advice.
So, Mr. Benedict, I'm very sure you've heard from Mr. Shion, and I'm very sure Mr. Shion will be able to assist in that regard. Am I right, Mr. Shion?
Yes, ma'am.
Yes, so you can, Mr. Shion, please, if you can just drop your details in the chat box for those that might want to pick it up from there and reach out to you after this session to speak about everything tax. as it concerns their business. So thank you everyone for turning up for today's session. We really appreciate you taking our time from a busy schedule to come learn about the new tax law and how it affects your business. So next week, Tuesday, join us again at 12 noon, and we'll be speaking on effective recruitment and retention strategies. Um, we'll be exploring the best practices for attracting the best talent. So I'll be dropping the link right now in the chat box for those looking forward to attending that session, because um your business, you can't really do business if you don't have the right talents in place that would help you, because really there's a saying that says that no man is an island, and that's just the plain truth. So I've dropped Mr. Shion's contact details in the chat box for everyone that want to pick it up from there. So I would also be dropping the link for this session next week in the chat box for those that would for you to click on register. So I've dropped the link for next week's session. It's going to be happening next week, Tuesday at 12 noon. So we look forward to having you at our next session. It promises to be another educative and insightful session for us all. So thank you everyone for joining for today's session. Thank you once again, Mr. Balogun, for taking us through today's session and the importance of the new tax law. We really appreciate you, and we look forward to having you when next would call on you to please facilitate another very educative session for us. Thank you so much, everyone, and do enjoy the rest of your day. Thank you.